Stocks are a little bit red this morning. That's been unusual after 19 days of upside in the market. A record, by the way. What stocks are going to be doing next? Quick recap of the markets yesterday. Markets did manage to eke out a small gain yesterday, but again, still remaining 3 standard deviations above the 50-day moving average. That's very elevated by most measures. And of course, the deviation from the 50-day moving average has grown back to levels that have normally preceded short-term corrections. Now, importantly, we do have our money flow sell signal in place, but as we've talked about all week, this really doesn't mean a whole lot as long as money flows are positive and the MACD signal is still positive. Those are the case right now, which suggests that maybe markets don't make a lot of gains here, but they do kind of consolidate sideways. And we've seen this action before, but eventually, once we get a confirmation by the MACD sell signal, that will suggest that you start to get some corrective action in the markets. That may be about another 1 or 2 weeks away, so expect some sloppiness in trading here for the next week or so. One of the things we're watching very closely here is the Volatility Index, because despite the market rallying up to make new highs here, the Volatility Index has actually been rising as well. Now, typically, this is a signal that we look for that equates to short-term corrections in markets. When you have both Volatility Index and the S&P rising in tandem, that typically precedes a short-term correction. In other words, we're about to see the point where the Volatility Index really begins to surge upward here as you start getting a correction in the markets. But again, this isn't an immediate trigger type sell signal that suggests raising cash immediately. Generally, this takes about a week or two for the signal to actually equate into itself. So again, combining the money flow signals with the MACDs as well as looking at the Volatility Index all suggests that we're very near some corrective action in the markets. Doesn't mean a major correction. Not talking about a bear market here, but just a relaxation of the markets, 3 to 5%, well within the context of a normal correction. Could happen within the context of a few days to a week or so. But again, this would most likely align with markets going into the mutual fund distribution season of the first 2 weeks of December. There's also some other indications of real speculation in the markets. AMD, a position that we put in our portfolios back a few months ago, has really just accelerated off to the moon here just recently. Just put little rocket ships all over this graph as it goes up. But this is not uncommon. We're seeing this in other holdings as well. NVIDIA, another holding that we've held here for a while, has also done exactly the same thing. Now, these stocks are trading at 4 and 5 times deviations from the long-term moving averages. Simply not sustainable. We've seen these type of actions before, and when you had this type of action, it led to a consolidation and eventually a correction in the price of the stock. So again, we've seen this action occur previously. It always winds up the same way. So if you actually own some of these shares, look, this is why we've started taking profits out of these positions. We're simply just resizing these positions back to their original portfolio weight. So example is if you own 2% of AMD, it's now 3% of your portfolio. Just trim it back to 2%. Take some profits here, put that cash aside, look for the next opportunity. Eventually, you'll have a correction here. You can put that cash back to work and buy AMD as an example, or NVIDIA back at a cheaper price. Ford looks exactly the same way. And as I was talking about with a good friend of mine yesterday, if I was Tesla at this point, with $1 trillion market cap, you've got a $70 billion market cap company. I would be actually using, if I was Elon Musk, buying Ford here with my market cap valuation of my stock. I could pay twice the value of the company at this point, pick up manufacturing, production, labor force, all that I need to have mass production of scale, plus, a whole bunch of new cars. That would make a lot of sense. Ford has been driving up here well over $20 a share here. Again, 4 and 5 standard deviations above long-term means it is going to correct at some point. Look to take some profits there as well. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you next time.